Good morning, traders. It is Friday, May the 3rd. Taking a look at the charts, we got the US dollar index. You can see we had a nice pop there out of support, and that put some pressure on equities the other day. But yesterday, and this morning, we're seeing more or less the dollar pull back, and that really helped push stocks and commodities higher yesterday. The dollar really isn't helping us much going forward here, so we're just going to kind of leave it at this time. It is trading down in this red zone, and it could really just fluctuate down here for some time until we get some type of pattern. It could try and form a little basing pattern, eventually create some type of resistance. If it breaks through that, it could really spark a rally to the upside. There will be a down trend line right across here that it could hit its head on, but if it does pick up speed and break through it and take off, we'll probably see stocks and commodities have a steeper correction. But right now, the US dollar, it came down, touched support, it's had a bounce. It is coming into key resistance right now, which it hit yesterday, and since then it's been pulling back. It's just these simple pivot lows. It's got a lot of congestion through here, so there's going to be a lot of resistance. I wouldn't be surprised if it chops around here for a little while and tries to build some type of basing pattern before it can pick up speed to the upside. We'll see how things kind of unfold going forward, but overall the US dollar is kind of useless to us right now. The only time it's good is when we are at a key support zone or a key resistance zone, and then you have more of a high probability of a move that could affect what stocks and commodities are going to do. Let's just jump into the SP 500 first. Lots going on with that. Here is the daily trend chart. If we look at this, we can see the trend remains up. We actually had the market get pretty extreme overbought yesterday, created a dollar sign, meaning that if we were long, we would be taking some money off the table. We are at resistance. Everything technical and sentiment is showing that the market is extremely overbought at this point, and some money should be taken off the table. Stops should be put in place under the recent pivot low. So with the market being overbought like this, we are in an uptrend, so it can stay overbought for an extended period of time. But overall, it's probably going to be chopping and grinding higher. Much like you see here, it doesn't just explode to the upside. This was a relatively strong move, but overall, you kind of get an up day, and then a day that kind of trades, a couple days that trades sideways, another up day, some sideways days, up days. It can just continue to bounce its head off of overbought territory and keep marching higher. So you got to be aware of that. You don't really want to short in a bull market, and a lot of times when you actually get these overbought territories, it means we're running the stops, and it can cause this trickle effect of grinding higher. It doesn't mean it's the top, it just means that it's reached a point where there is a higher probability that it will pull back, but we are in an uptrend and things can continue to grind higher very easily. And what we're focusing on are trying to pick up in the dips and sell on the bounces of overbought territory. Now let's just take a look at the futures charts. You can see where we're trading this morning for the SP 500. This is going back all the way April. You can see we've had the dip kind of started to form a little bit of a basing pattern, kind of broke above it, and it's been running its way higher. And since it's hit this top here, it's been chopping. We've seen so we saw a big wave of selling. We're coming back up. There's a couple mini patterns here forming. If we just look at these patterns, we've got an overall larger cup and handle pattern forming here. 20-day moving average is coming up to support it. The more it trades sideways here, the more potential it has to move higher and break out to the upside. So this cup and handle pattern, if it breaks out, we've got potential to see a pretty strong run in the SP 500. We could actually see it jump all the way to the 1625, 1630 area. Now zooming in on a shorter term time frame, right here you can see we've got a mini, this is just in the past 48 hours more or less. We've got this pullback, recovery, bull flag, which is acting as a handle at, you can see right here, this blue volumes is price by volume. There's a lot of resistance right there, and we came up to that right into the close and held there. So it's going to try and take a breather and eat through that resistance, but this pattern points to higher prices, which means we should if this pattern does break out, we should pop and break the 1600 mark. And when we break the 1600 mark, the following couple days are going to be very key. Because it's a major resistance, it's a whole number. There's a lot of people picking it. We're into the May now for sell in May, go away. The question is, can we hold the 16 or do we pop above it and shake out some long-term long positions that are short, and if we do, that'll spark a pop in the SP 500, and the question is, can we hold it, or will it sell off very sharply, more or less with a pop and drop, meaning it gaps or runs up higher one day, the very next day it reverses sharply and sells off with an engulfing bearish candle. So we'll see how things hold up. We're at a pretty critical time of the year, pretty critical price level for the SP 500. And we're going to be watching it over the next couple of days, as it could be a fairly significant pivot point in the market. Now let's just take a look at some market internals. Looking here, you can see we've got the stocks yesterday. Excuse me. The volume on the NYSE is about 3-to-1 ratio, showing a majority of people were buying. 3-to-1 to me shows everybody's running for the door. There's a lot of shorts covering their positions, and when everybody's running for the door, generally you see a pause the next day, as there's just because everybody has now made their move. Usually you just see a breather for the next day, or a minor pullback. Now we are in a strong uptrend, so it could continue higher, but just be aware that we had an extreme move yesterday, and it's just pointing to a little bit of a breather here going forward, and price may chop around for a bit. New highs, considering we pushed to new highs on the SP 500, not a big fan of the stocks hitting new highs. We should really see this up in the 200s for both of them, and maybe even 300s, and we're not. That's a sign I've been talking about for the last week or two about the market internals kind of getting weaker as we're going higher. And couple that with sell and may go away, you start to get the picture that things are weakening, and that a correction is very likely around the corner. Taking a look at stocks trading over the 20-day moving average, or sorry, the bar chart momentum index. We just look at this. We went yesterday morning, I pointed out how we were down into the oversold territory. We usually get a bounce. We closed down here, way below the 99. Yesterday we had a big pop, and we rallied way above the 101. This is the 101 level, and yesterday we closed in overbought territory. So you can see here the price action recently compared to before. It's really expanded. We go from overbought to oversold, overbought, oversold, overbought, and that just goes to show the bulls and bears are fighting. Things are kind of weakening, and the volatility is picking up. So with the overbought market, I wouldn't be surprised here with this momentum that we see a little bit of a pause or pullback today. It is Friday, one of the most important days of the week, the closing price of the week. That's very important for investors, and it can trigger a big move at the close, or on Monday when investors see what happened for the week and they adjust going forward for their long-term positions. Looking at, let's just jump to energies real quick here. Crude oil, pointed out, really it's kind of chopping around in this range. Big sell-off earlier this week, huge recovery in the last day and a half. We're back up here, very choppy. As I pointed out, when it's trading in the middle of a range, you don't know which way it's going to go. It's going to chop around. We don't really want to get involved down with things kind of whipping around in the middle of the range. We're just going to ignore it for now. Yesterday was a huge down day for natural gas. We started to get a pretty sharp breakdown, big volume on the downside, and we'll see how that kind of unfolds. Again, major support for this, and a nice correction somewhere down around the 360, 340, somewhere in there. It should find some pretty steep cushioning if it can work all the way down there, and really until it pulls back more. It is down to a support trend line here, some old trend lines going back, which it's bounced off a few times, and it had a huge move down yesterday. Wouldn't be surprised if we see it have some type of bounce back up to possibly the 420, but overall the big picture here, we've been chopping and grinding higher, and overall a sharp pullback down into this zone is kind of what I'm looking for. Taking a look at precious metals, here's the gold chart. We started to roll over there. It's been creeping its way higher. It's pushing up to a little bit of a new high this morning. Overall, it's still working away on, let me just change to the daily chart real quick. It's still working away with this inside candle. So we're still trading within this candle. We're under key resistance. We've got this down trend line, which is very clear, and really we're kind of seeing how things are going to play out here. Overall, this pattern is still relatively bearish, and at any time we could get a big downdraft in precious metals, especially if the US dollar explodes to the upside. So anyways, overall the trend remains down for gold. I'm not looking to get into it. I don't really care if it goes up. I don't care if it gets to the 1560 level. It's still not even breaking this previous high. The trend really hasn't shifted. I'm not looking to get involved in it. Overall, in the long-term picture, gold is still in a very bullish, a strong bull market, and it has to recover here in the next few weeks or months, and depending how it recovers, it will remain in a bull market. But if it continues to show weakness and does more damage, then it will actually be flipping to a bear market. But right now it's just trending down within a major bull market, and we're waiting for a setup to get long before we get involved here. Looking at the silver chart, similar to gold, it's worked its way up. Still, silver has a little bit more of a bearish pattern. Strong move down. This kind of creep higher into resistance. This average price up here is fairly bearish. We're seeing price decline, or volume decline, as price goes up, and at any time we could get a sharp downdraft to the 23, possibly back down 22 area. Looking at gold miners, they were kind of mixed. GDX was up more or less flat on the session. Gold miner juniors were down a little bit. Just nothing significant. Trend is still down. It's still consolidating here, forming a bear flag, possible little bull flag on a short-term basis, but overall the trend here remains down and is forming a bear flag that technically points to lower prices as of yet, or continuously. Looking at bonds, here's the bond chart. Bonds are just slowly grinding their way higher and higher, kind of just inching their way up. Fear and fear continues to grow as we go into May, and I think a lot of people are starting to expect a May pullback at any time, which is why we're just seeing a slowly creep higher and constant support into bonds. I do feel as though they're going to have a pop probably when the market does crack to the downside, but overall right now I'm not looking to get involved in bonds. Looking at the price action, let me just get, here we go. You can see where we're trading. We've got previous highs in bonds. We are trading right up at those highs. You can draw a support trend line itching its way up. It is kind of forming a rising wedge into resistance. If the equities market pops here and rallies really strong, and we got confirming breadth numbers, which we don't have quite yet, we could see bonds pull back very quickly to the 145 area. Overall, they've been working their way up into resistance. A lot of times price likes to break a previous high. 150 is a pretty key level. I wouldn't be surprised if we see a touch or pierce of it, and then from there we could see a sharp pullback in the equities market, even continue higher. Just because it's May and things are overbought doesn't mean the equities market will sell off. The market can stay overbought for years, back to back, and so just being overbought on a short-term basis doesn't mean a whole lot in general. It's just something to be aware of. So bonds to me are looking a little more bearish, and it's kind of interesting because stocks look like they're getting overdone and people are fearful. The thing is, if you think outside the box here, when everybody is fearful and slowly piling into bonds, anticipating stocks to pull back, what happens when stocks continue to break out and run higher? All this money that's been piling into bonds is going to come out, and then all the money is going to go into equities. The SP 500, if we were to just draw a picture, a short-term basis, are testing near the highs, and we're probably going to see a little bit of a pause here. When all this money starts to flow out, we're going to see it pile into equities. We're going to see an extended leg and run higher in the stock market. So it's kind of interesting that bonds are actually kind of pointing to lower prices here, which means that money is going to eventually come into the risk-on assets and drive the equities market higher. So we got to be very aware of that. The trend for stocks again is still up. You don't want to be picking tops. It can continue to stay overbought and run higher for a long time until the trend actually breaks down. and then has some type of recoil and actually breaks some significant levels, we'll be looking to short it when it bounces up into resistance, becomes overbought, and we'll be playing the legs to the downside. But that's a long ways away. The price has to fall a lot for the trend just to reverse, and then we play the recoil bounce high. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.